Welcome to a new Web TV episode from Sportyjob.com. See you on our website for archives and all kind of details about the latest job offers in the sports industry. But before starting this week's episode, we would like to wish you all the very best for 2012. Black Leisure appeared to be in disarray this week after Sports Direct International, the leading British sports retailer and wholesaler, said it would not issue a bid to acquire the debt-ridden owner of the Blacks and Millet outdoor stores. Other parties, Go Sports, Mountain Warehouse, Lion Capital and Hilco, that were said to have shown interest in Blacks, have so far failed to come forward with any public bid. After Sports Direct International walked away from a deal, speculation mounted about the immediate fate of Blacks. Some even predicted that it would have to go into prepackaged administration, a form of bankruptcy. Aided by several acquisitions and store openings, Sports Direct International managed to lift its sales by 8.4% for the half year until October the 23rd, in spite of the tight economic situation in the UK and some of its other markets. The company's British retail sales were up by 82%. It had 397 Sports Direct stores in the UK, excluding Northern Ireland, at the end of the period. And furthermore, Sports Direct International moved into the fashion market in July by acquiring 80% the company owner of USC and Cruise stores. Meanwhile, SDI's international retail business inflated its sales by 22.3%. SDI said that it still aimed to have stores in all countries of the Eurozone and in the 5 next years to come, but added that it would not ignore the opportunities in other European countries. After El Corte Inglés showed some interest in buying Kaufhof, in late 2011, Metro Group, owning the German retailer, has announced to the media that the race for acquisition of Kaufhof is still open. There are bids on the table from Nicolas Bergum, the owner of Karstadt, the other major department store chain in Germany, and from René Benko, an entrepreneur in real estate business in Austria, whose company is partly owned by a Greek shipping magnate. Nike is bulldozing its way through the economic rubble as its sales soared by 18% in its second fiscal quarter until the end of November 2011. The performance has pushed Nike managers to upgrade their forecast for the full year, predicting that sales will rise in the mid-teens range. However, the situation has deteriorated for the group's gross margin due to the stronger pressure from exchange rate and weaker performance in international markets. For the second quarter, Nike's brand sales were up in all regions except Japan and in all categories except action sports. Among the standout categories, the brand enjoyed double-digit growth in basketball and running. European sales growth continued to be relatively meager though. Double-digit growth in Germany, Austria and Switzerland could not make up for the declines in almost every other country. Amer Sports is moving further into the action sports market with the acquisition of Nikita, the Icelandic brand of board sports and lifestyle apparel focusing on women. Amer Sports is already involved in action sports through Salomon snowboards and Bonfire apparel. The move fits with the Finnish sports group's strategy to invest more in apparel and footwear. Nikita, which was established in 1998, reaches annual sales of about 8 million, mostly in Europe, and with some distribution in North America and Asia. The sale will provide more funds for the brand to expand its product range in the board sports market and to widen its distribution. The Quicksilver Group ended its fiscal year with a buoyant last quarter, and its sales increased by 10.1%. European sales firmed up by 11.4%. Both figures were equivalent to an increase of 6% in constant currencies. The first mountain board rider store has also opened in Chamonix on a 400 square meter and 3 levels. Others are expected to follow, and the 6th European board rider concept store is set to open in Barcelona in 2012. Vegas Europe, the French-based company that held the license for the Risty software brand around Europe, has gone into liquidation. The group was established in 2008 as a European subsidiary of Vegas Enterprises, an Australian company that secured all rights to the Rusty brand in 2007 after drawn-out legal disputes. Vegas Europe made a splash to kickstart Rusty's sales again after 4 years of absence from the European market, targeting a turnover of about 10 million euros in short term, but its actual sales apparently failed to justify the expenses. The company of the week is Duprat Skis and Snowboard, a brand founded by Serge Duprat, active member of the snowboard community since its European inception back in the early 80s. The brand, handcrafting boards and producing limited series, is born from a handcraft business model very close to those found in surfboard manufacturing. With designs that have revolutionized snowboard through its history, Serge Duprat has accepted the challenge of bringing his revolutionary vision to the world of skiing. From Sportyjob, we wish him the very best in this new adventure. Lotto Sport Italia has hired Stefano Straforini to act as European sales manager with responsibilities for the major European markets. Justin Timberlake, the American singer, actor and heartthrob, has been appointed creative director at Callaway Golf. Olivier Lemoine is the new sales director for core markets at Skullcandy, and Thierry Peugeot is the new European marketing director for the brand. Our job offer of the week is brought to you by Oakley. Oakley EMEA is looking for his visual merchandising and retail marketing manager. The candidate will be in charge of the retail marketing and develop the visual guidelines for both channels, wholesale and retail. An experience of at least 7 years is desired. His position is based in Zurich. For more details, please log on sportyjob.com. And now the latest stock market trading from the world's leading companies in the sport market.